Hello investors, welcome to Simply Stocks. We are starting a new series on our channel in which we will be discussing various emerging sectors and their top stocks. This is the first video of that series and today we will study a niche sector, pre-engineered buildings or PEBs, and the stocks related to the PEBs theme. This sector is already quite developed in the USA and Europe and now it is rapidly emerging in India. So without any delay, let's get started quickly. First of all, let us understand what these pre-engineered buildings or PEBs actually are. PEBs are buildings as well, but instead of concrete, they are made from steel. As you can see on my screen, this is an example of a PEB. This steel structure of a building is developed, upon which then walls and the roof are installed. PEBs are prepared in a factory and then they are erected at the client site. For example, the T3 terminal of Delhi airport is a PEB. Similarly, Blue Star's AC manufacturing plant in Andhra Pradesh is also a PEB. Apart from this, you will also find solar facilities and data centers that are pre-engineered. The paint plant of Birla Opus in Haryana is also a pre-engineered building. And the reason for their adoption is, see, if you are constructing an office, you need multiple floors to accommodate many people. But in a factory, you need a high ceiling. The floor area has to be broad and big and tall because there are these big machines that have to be installed, right? That's why the majority of demand for PEBs is coming from the industrial and manufacturing sectors. These PEBs are made of steel and cost less than regular concrete buildings. Also, they can be constructed much faster compared to concrete buildings. They are used in automobile, cement, oil and gas, and other sectors. Besides that, they are also used to build warehouses, cold storages, data centers, aircraft hangars, railway yards, etc. Talking about the industry, PEBs is a niche sector worth 20,000 crore rupees in India today, and it is growing at a CAGR of approx 12% per annum. If we look at the growth so far, until 2019, only 2 to 4% of buildings in India used to be PEBs. In the last 5 to 6 years, this share has increased to 3 to 5%. And as people are becoming more aware of the advantages of PEBs over concrete buildings, their application is also increasing. For example, as you can see in this graph, the cost of PEBs is 40 to 50% lower than traditional concrete buildings. Apart from this, there are many other advantages too. For instance, concrete buildings are built outdoors, so construction often gets delayed due to rain, weather, or labor issues. PEBs, on the other hand, are built completely indoors in factories, and since machines are used for their manufacturing, the work gets done faster. They also take less time to build. PEBs can actually get ready in half the time it takes to construct a concrete building, regular concrete building. And since they are made of steel, you can make modifications whenever you want, wherever you want without any hassle. You can't make such changes easily in concrete buildings, or if you do, it will cost you a lot of money. So PEBs is a good emerging segment that is growing at a steady rate in India. Let's now move on to our stocks. So there are majorly four listed players in the PEB space in India: InterArc Building Solutions, Pennar Industries, Everest Industries, and Bajaj Steel Industries. Among these, InterArc is the biggest player. It has a capacity of 1,60,000 tons and is currently adding another 40,000 tons, which will take its total PEB capacity to 2 lakh metric tons. Then there is Pennar with 90,000 tons capacity. Recently, its new 36,000 ton went live in Raebareli. So that adds up to 1,16,000 tons. Next come Everest with 72,000 tons and Bajaj Steel with 35,000 tons of capacity. And yes, as a standard disclaimer, none of these stocks are buy or sell recommendations. Please keep that in mind. Also, if you see here, except for Everest, which is currently in losses, all are high ROCE businesses. Pennar has around 16% ROCE and Bajaj and InterArc are around 20%. And there is still a lot of scope for them to improve even more. Now, before we move ahead, I want to thank all of you. In our last video, I talked about our WhatsApp community and the response has been very good. Many of you joined the community and I hope that more and more people get to know about it. Through Simply Stocks, our goal is to bring same information and resources to retail investors that ACE Investor, mutual funds, DIIs and FIIs have. In this community, we track closely over 100 high quality stocks. We discuss their business models, valuations, risk factors, quarterly results, etc. Everything in great detail. I also share my own portfolio here as example. I am personally there for you to clear all your doubts on one-to-one basis. But yes, we do not give any buy or sell calls on any stock. We are not SEBI registered. So if you are interested, you can send me a WhatsApp message on this number. Otherwise, we also have given a link in the description. You can message us using that link. And remember, this is a paid community with a monthly fee of just 850 rupees, meaning for just 850 rupees per month, you are getting to know about so many good quality stocks. And yes, there are two plans, 6,000 rupees for 6 months and 10,000 rupees for a full year. In the 6-month plan, your per month cost will be 1,000 rupees, and in the annual plan, your per month cost will be just 850 rupees. So if you are interested, you can contact us using the link below and you can join the community. Now let us come back to our stocks. Among them, InterArk is growing the fastest. In the recent fourth quarter, that is from January to March months, its sales grew by 20%. And going forward, the company is targeting 18 to 20% sales growth. InterArk's management has also said that margins will improve in the future. So if we consider both the things, this 18 to 20% sales growth and margin expansion, we can estimate 25 to 30% net profit growth for InterArk. Next is Pennar Industries. Pennar's 50% business comes from PEBs. The rest comes from car bodies, steel tubes, hydraulics, and other steel products which are used in various sectors. You will notice that Pennar's margins are lower than InterArk's. They are currently working on fixing several aspects of their business, I mean their management. This year, they have guided around 15% sales growth. If Pennar manages to improve its margins, it might see better profit growth than InterArk. But again, we cannot be sure of that. InterArk is currently trading at a PE of 35, while Pennar is at 28. The market is giving InterArk a higher PE because in that business, everything is sorted right now. Everything is going well. Now, after that, then we have Everest and Bajaj Steel, both of which are relatively smaller businesses. Apart from PEBs, they are also into other businesses. Everest deals in other building materials like tin sheds, wall partitions, flooring, etc. as well. Bajaj makes industrial machines. For example, it makes cotton processing machines and it surprisingly controls 50% of the market in India in that segment. Everest's 35% sales come from PEBs, while for Bajaj, that figure is only 15%. However, both businesses are growing fast. They both are increasing their focus on PEBs. For example, Everest's PEB segment grew by 40% in 1 year, and they are planning around 200 to 220 crore rupees capex for it. Similarly, Bajaj has also planned an investment of 100 to 110 crore rupees over the next 2 to 3 years to triple its PEB business. Now, if I summarize everything to you, InterArk is definitely a good business by all standards. Pennar is currently less efficient and facing margin issues, but management is saying that they are working on that. Everest and Bajaj are much smaller players. Everest is although bigger in size, but then it is also running in losses. But if any of them can manage to grow their PEB businesses, then they can see faster growth than InterArk and Pennar because their base is quite small. But because of this small base, you'll also have to be more vigilant. You'll have to track them every quarter. The results can swing either way from very good to very poor. So that's a risk. And actually, all four of these are small cap businesses. So you will need to monitor them very continuously and very closely. And if you want, for this, you can also join our community. We actively track all four businesses there. The link is in the description. Now, finally, you tell us in the comments which of these stocks did you find the best. And yes, if you like this analysis, then make sure to give us a thumbs up. You can also subscribe to our channel. We will be covering more such interesting sectors in the coming days. I'll see you in the next video. Happy investing.